Hello there. So this video will be about capital market instruments, basically financial instruments used in a capital market. So we have here an article from businessmanagementideas.com. Okay. So we'll go over the different financial instruments being traded in the capital market. Again, yung capital market dito, kumbaga, not really trading, but an exchange of funds or capital. Yung mga tao na mayroong excess funds, either investors or savers, they have the excess money, they put it in the capital market through the financial institutions or financial intermediaries. And then, yung mga tao naman na nangangailangan ng funding, like businesses, entrepreneurs, so they go to the capital market to ask for funding. Okay, normally, atong capital market, capital, di ba? It's in the form of equity, pero other times, pwede rin siyang debt instrument or borrowings. Okay, pwedeng utang, pwedeng yung capital mismo. Na, di ba yung pagkapital mismo yung funding, yung nagbigay ng fund na yon nagiging siyang co-owner or meron siyang share sa ownership ng isang business or endeavor. Okay, pero kapag utang lang, di syempre wala siyang ownership share. Kailangan siyang ibalik or bayaran ulit nung nangutang. Okay? So, financial instruments mean documents that evidence the claims and income or assets as any contract that gives rise to both a financial asset on one enterprise and the financial liability or equity instrument of another enterprise. So, yung nagpapautang, yung pinanggalingan ng puhunan, siya yung merong financial asset, okay, in the form of cash. Okay, or any other asset na siyang ibibigay niya dun sa nangungutang. Tapos itong nangutang or naghahanap ng funding, magkakaroon naman siya ng financial liability kung utang, yung form of funding, or equity instrument kung equity or ownership share ang tawag dito, naging kapalit nung funding. Okay? Securities. First, we have securities, general term for stock exchange investment. So, pwedeng debt, pwedeng equity instrument. Okay. We have here, Securities Contract Regulation Act 1956 defines securities as to include the following: shares, scrips, stocks, bonds, and debentures. Later on, merong kanya-kanyang definition itong mga to. And then we also have government securities in the form of treasury bills. Such other instruments as may be declared by the central government to be securities. Dito sa atin, normally BSP or SEC or PSE ang nagde-declare rights or interest in securities, and then we have derivatives and securitized instruments. Securities are generally classified into ownership securities, equity, and creditorship securities, debt instruments na ng utang. Ownership, yun parang bumili ka ng ownership share dun sa company na ipa-fund mo, or creditorship securities, debt, utang, parang pinautang mo lang, na in a way, meron kang expectation na isasoli sa'yo yung fund na pinautang mo. Okay? Equity shares and preference shares are ownership securities. Okay? Normally, dito sa Pilipinas, we call it ordinary shares saka preference shares. Okay? They are also known as capital stock. Okay? Meron tayong, di ba, yung share certificate, shares of ownership. Creditorship securities are bonds, debentures. They are referred to as debt capital. Okay? Balikan lang natin, di ba yung mga businesses, for them to be able to operate, they needed the funds, syempre. And normally, two sources lang naman yung funds nila. Una nga is utang. Okay, pwedeng, di ba, in a previous video, we've discussed yung sources of funding or types of investor. Pwedeng personal sources, family and friends, pwede ding venture capitalists, pwede ding angel investors or peer-to-peer lending. Pero here in the Philippines, of course, kapag dito, medyo formalized na yung business mo, 2 to 3 years old na, pwede nang mangutang sa formal creditors like banks or other financial institutions. Okay? So, in that sense, yung source, kapag ganon, ay di utang, creditorship, or debt, or borrowing, or loan. Okay? These are the different terms, pero isa-isa lang naman ang ibig sabihin nun. utang yung pinanggalingan ng funds. Okay? And then the second one is to sell ownership or co-ownership of the business. Kung ikaw yung may-ari, sabihin mo ay, partnership tayo, let's say 50-50. Okay? Hati tayo sa gagawing puhunan nitong business na to. Kung ang capital ng business is 1 million, hati tayo. Kalahating million manggagaling sa akin, kalahating million manggagaling sa'yo. Okay? Or kung yung share corporation siya tapos in the form of shares, edi mas maraming tao yung pwedeng paghinga ng capital. Let's say 20 kayong katao na tig 50,000 kayo, ganyan. Okay? Or pwede din namang unequal share, di ba? Kunwari, ikaw, kalahating milyon yung nilagay mo sa business, tapos naghanap ka ng other sources of funds, pinagbibili mo nga yung ownership share dun sa business. Let's say yung isang tao ang binigay 100,000, another person nagbigay 200,000, the other person nagbigay mga 300,000, ganyan. So, may mga ganang type, okay? And then, of course, ang kaibahan, pag utang nga, kailangan mo siyang bayaran ng interest. Tapos, kapag na-mature na siya, kailangan ibalik mo yung buong inutang mo, yung tinatawag natin na principal. Pagdating doon sa ownership, ito yung kagandahan kasi ng ownership. Hanggat nag-ooperate yung business, yung fund is nasa business lang. Especially kapag corporation, walang recourse itong si nagpondo, yung nagbigay ng fund, para hingin sa'yo yung nilagay niya na fund. Okay? Kasi meron tayong rule sa corporation code na bawal siyang bawiin. That's why kung gusto man niya na mabalik yung pera niya, hindi naman mabalik. Kung kailangan niya ng pera talaga, edi ang gagawin niya, ipagbebenta niya sa iba yung ownership share niya. Okay? On the part of the corporation, hindi affected, kasi hindi siya maglalabas ng pera. Ang mangyayari lang, i-record niya na hindi na pala itong si person A ang may-ari ng shares kasi pinagbenta na niya kay person B. Okay? So in that sense, kapag kumita yung business, nag-declare ng dividends, ng earnings, ang makakatanggap ng earnings, ng dividends, ay ito lang si person B. Okay? Kasi pinagbili na sa kanya yung yung shares ni person A. Okay? So again, kapag utang, ang kinikita doon or nagiging benefit doon ng nagpautang, di syempre interest. And then kapag siya naman ay ownership ang kanyang dahilan kung bakit siya nag-fund, kasi bumili siya ng ownership share doon sa business, di ba, yun nga, merong parang ang labas is isa siya sa mga may-ari ng business. So, kapag nag-earn ng profit yung business, tapos let's say, agreement ng lahat ng owners or majority of the owners, mag-declare tayo ng dividend, So, yung i-declare na dividend, ang maghahati-hati ay yung bawat isa na merong ownership share dun sa business. Okay? So, dun sila kumikita naman kapag ang ginawa nilang funding is equity. Okay? So, yan. Equity holders are the legal owners of a company. Equity shares are regarded as the cornerstones of the capital structure of a company. They are the source of permanent capital which does not have a maturity date. So yun nga, habang nag-exist yung business, andun lang yung fund. Okay? Babalik lang yung fund na yun sa kanila kapag nag-cease to exist na yung corporation or what do you call this? Nag-liquidate na, let's say, they decided na tigil na tayo ng operation, ayaw na. So, mag-liquidate, kung ano yung net equity na matitira, isosole sa mga owners din. Pero syempre, merong procedure din naman sa liquidation. Unang babayaran yung current operating expenses nila, taxes, payment sa workers na nakapag-serve na ng work, tapos interest sa, what do you call this, mga utilities, interest sa mga kautangan nila, tapos sunod na babayaran ay yung mga creditors. Yung matitira, yun na lang yung paghahati-hatian ng mga owners. Okay? Yan ay in case lang naman na magsara na yung business. And that is the only time na babalik itong equity, what do you call this, yung equity funding, dun sa mga equity owners. Okay? As the owners of equity shares, the equity shareholders participate in the management of the company. Ayan, another thing. Meron silang right na makialam kung paano pinapalakad yung business kasi essentially, may-ari rin sila ng business. Kapag creditor ka lang, debt financing or debt funding, wala silang pakialam kung paano mapapatakbuhin yung business. Kasi creditor lang sila, babayaran mo naman sila agad. Not necessarily agad. Pabayaran mo rin sila eventually. Okay? Through the elected board of directors and through their voting rights in important decisions, they share the profits and assets in proportion to their holding in the net assets of the company. Di ba yung net assets minus liability equals equity or net asset na tinatawag. So yung net asset, equivalent siya sa equity. Okay? Or yung ownership sa business. Advantages of equity shares. Following are the advantages of equity shares. So, una, permanent capital. It provides permanent capital to the company. The capital need not be repaid as long as the company is a going concern. Itong going concern, technical term siya. Ang ibig sabihin, nagpapatuloy na mag-operate yung business. Yun lang naman yung going concern. No fixed charge on income. Okay? Anong ibig sabihin nito? Yung, di ba, pag utang, interest, taon-taon siya, di ba? Kailangan bayaran mo siya either taon-taon, or quarterly, or semi-annually, or monthly, right? Legal obligation yon, na kailangan mo talaga siyang bayaran. Pero kapag equity funding siya, yung business, pag siya ay loss, nag-result siya ng loss, kahit hindi, let's say, di ba, loss na nga so wala siyang profits, right? So, dahil doon, wala siyang i-declare na dividends. Kasi ang dividends ay to be declared out of earnings or profits lang, right? So, nagkakaroon lang sila ng i-distribute dun sa mga equity owners kapag kumikita syempre yung business. And napagkasunduan nila na yung earnings, hindi nila gagamitin sa, let's say, expansion or pagbili ng additional fixed assets. So, pwede nilang i-declare portion nun as dividends. Yun yung magiging kita ng fund owners. Okay? Pagdating dun sa utang, kumita man o hindi yung business, kailangan nilang bayaran yung interest sa utang. Okay? Pero kapag equity, pag hindi kumita, walang source ng, walang earnings sa pagkukunan ng dividends. So, walang i-declare. Okay? Payment of dividend is a management policy and normally out of earnings kapag kumikita lang yung business. Company is not legally bound to declare dividend even if there is sufficient earnings. Ano itong ibig sabihin nito? Kahit may earnings, minsan hindi sila required na mag-declare kapag may paggagamitan sila ng earnings. Let's say, balak nila mag-expand, magtayo ng panibagong branch. So, instead na i-declare na dividend yung earnings nila, diba? Instead na i-distribute dun sa mga may-ari, gagamitin kasi nila para mag-open ng panibagong branch. So, yun. In that case, normally pinag-uusapan naman yan sa board of directors nila. So, merong voting na nangyayari. So, mag-declare ba tayong dividends o gamitin natin lahat sa paggawa ng panibagong branch or pagbili ng mga panibagong mga gamit sa business. Ayan. So, may agreement naman yon. So, let's say may humirit. Mag-declare naman tayo kahit konting dividends lang. So, yun. Pag-uusapan nila magkano hanggang saan, how much percentage yung dividend na kailangan na kaya nilang i-declare. Okay, so may gano'n naman. Dividend payment can be postponed. This adds flexibility. Okay, so let's say na pag-usapan nila, hindi, next year na lang. Para yung lahat ng earnings natin ngayon, gamitin natin sa expansion. Tapos next year, yung tawag dito, yung kikitain natin next year, yun, declare natin lahat na dividend. Ayan, pwedeng gano'n, diba? So, can be postponed, tapos flexibility kasi napag-uusapan naman yan sa board of directors. Base for further borrowings. Lenders generally lend on the basis of paid-up capital and reserve. This is the net worth of the company. A higher net worth increases financial capability. Okay? Kasi nga, funding ownership siya, So, kumbaga, ang pagtinignan niya ng creditors or ng potential investor or potential creditor, ang makikita nila dyan is, tawag dito. Ang makikita nila doon, di marami palang pera naman itong business, or may kakayahan naman sila na, probably makikita nila na may kakayahan silang magbayad, although mangutang sila ngayon, meron silang source na pagkukunan ng pambayad. Okay? So, tinitingnan ng lenders yun nga, yung equity. Paid-up capital, saka yung reserve. Paid-up capital, normally ito yung shares mismo. Yung reserve, normally ito yung retained earnings, yung kinita ng business over the years. Na-accumulate siya in that particular account. Pero ang tawag natin dito, retained earnings. Okay? But sometimes they call it reserve. Okay, number 4, trading on equity is possible. Yun nga, kapag let's say you have a particular shareholder, di ba, hindi nga pwedeng bawiin from the corporation yung perang binigay niya. So, mangyayari, hanap na lang siya ng ibang tao na gusto mag-invest sa company, bebenta niya yung kanyang ownership share doon. So, yun. When borrowing becomes cheaper, company can borrow money and invest. The whole earnings after the interest belongs to the shareholders. Okay. Okay. Ibang take pala ito. Ito, parang ang nila, yun nga, tinitrade yung equity din naman, di ba, sa stock exchange. Ayan. Tapos, normally, kapag holder ka ng equity, edi kung ano yung maging earnings nga ng business is, yun na yung pinakang probable interest or dividend na matatanggap ng shareholders. And of course, mas malaki yung maging kinita nila, di ba, profitability. Showing their profitability, then the company can borrow money from other institutions and then invest that money din naman. Okay, voting rights. As the owners of capital equity, shareholders can express their opinion on all important matters through their voting right. Normally, merong rules din ito, corporation code. Depende, merong different types of decisions. Let's say, kapag major decisions, I think kailangan majority of the shareholders. Okay, so kahit yung maliliit lang na shareholder, kailangan magbo-vote. Once a year, merong mandatory na assembly. Once a year, dapat merong shareholders meeting. Tapos, I think, during that, from the beginning naman, nagkakaroon sila ng voting din kung anong types of decisions ang kailangan lahat ng shareholders ay magvo-vote or pwedeng i-delegate na nila sa board of directors. Okay? So, merong mga ganun. Let's say, kailangan bumili ng, equipment, ng land, ng other fixed assets, depending on kung anong nangyari, kung anong naging agreement during the shareholders meeting, pwedeng kasing i-delegate na nga nila sa board of directors for easier execution. Pero kung, let's say, merong mga major din naman, let's say, magbebenta naman ng fixed assets. Let's say, ibang take, kapag bibili, sige, okay lang board of directors na mag-decision. Pero pag magbebenta, dalhin nyo sa shareholders meeting. Okay, kailangan ay majority of the shareholders ang mag-decide. Okay. But again, that's just an example. Depende sa usap pa din ng mga shareholders. Again, then we have blue chip shares. So, una ko narinig yung blue chip, ang nasa isip ko talaga yung, chips. Yung mga nasa ilalim ng laptop, right? Inside of the laptop, mga ganon. And then the blue chip. Okay. Pero essentially, ang ibig sabihin pala ng blue chip companies, growth-oriented companies showing signs of expansion, diversification, modernization of technology. Ayan. So, yun yung kanilang mga characteristics. So, they have consistent profitability over the years, palaging profits. Tapos, mataas yung profit nila. Profit margin, compared to kanilang sales or revenue. To sustain consistent dividend distribution. Examples nito, Colgate, Hindustan Lever, LNC, Reliance. Ayan. Blue chips are common stock in a company known nationally for the quality and wide acceptance of its products or service. So, in a way, parang, reputation-wise, kilala na companies, tapos may history na rin talaga sila na maayos na pamamalakad. And profitability, of course. Blue chips are of two types. This emerging blue chip and established blue chips. Okay, emerging blue chip companies are those which are turnaround companies and exhibit potentiality to grow and expand in sales and in net profit. So I think yun yung normal na tinitingnan, sales, net profit. Established blue chips are those companies who are leaders in the industry like Reliance, Raymond, Cisco, etc. Okay, mga kilala na talagang companies. And of course, yung consistent pa rin yung growth despite their, yung malaki na silang company pero nag-grow pa din. They have a strong capital base and net worth, organized and professionalized management, uninterrupted dividends, yearly talagang nag-declare sila, no? Bonus issues, rights issues for investors. Such companies' shares are worth holding for long and are recommended in all portfolios on investors. Ano, kasi kumbaga, tested na andun na sila, kilala na talaga, and may proven track record na ng profitability, declaration ng dividends, yun, ganun. Equity shares with detachable warrants. Fully paid up shares can be issued with detachable warrants. This will enable the warrant holder to apply for a specified number of equity shares at determined price. Detachable warrants are registered separately with the stock exchange and traded separately. Ano ibig sabihin ng warrants? Okay. Let's say yung company may balak siyang mag-raise ng capital. Let's say from 25 million, gagawin niyang 35 million. So mag-i-issue sila ng panibagong shares amounting to 10 million, right? And meron tayong right, tawag dito, as current shareholders ng company, meron silang right, parang sila yung unang o-offeran nung increase in authorized capital. Kasi kumbaga, first dibs, ganon. Kasi kayo yung current owners na So, if you want to increase your shareholdings, so kayo yung unang bibigyan ng option na bumili ng additional shares. Pero kung, let's say, ayaw naman, edi yun, sa kanila yung offer to the public. Okay? So, that's why it's a detachable warrant. Okay? Kasi pwede rin siyang ibenta, So, let's say natanggap siya ng mga current shareholders, ayaw namang bumili ng additional. Pero of course, normally kasi in detachable warrants, meron siyang naka-indicate kung kailan ka bibili at gaano karami yung pwede mong bilhin at at what price mo siya bibilhin. So, regardless kung masyadong mas mataas yung nasa market, ang pagbibilhin mo siya, yung price na nakalagay dun sa warrant pa din. Let's say, traded siya in the market for 200 pesos per share, pero yung nasa warrant, 150 lang per share. Okay? Kasi nga, kumbaga parang benefit because you are an owner of the business already. Okay? And you're a current owner. So, yun, merong certain benefits, right? So, yun, kung ayaw mo naman siyang bilhin, edi pwede mong ipagbili yung warrant. Magkano mo siya ibebenta? 150, di ba yung nakalagay na let's say, predetermined price ng share. So, 200 siya sa market. Para naman magkaroon ka ng konting kita, pwede mo siya ibenta for 30 pesos per warrant. Okay? Sample lang naman. Sweat equity shares. I'm not sure if we have this in the Philippines. These are equity shares issued by the company to employees or directors at a discount or for consideration other than cash. Oh, okay. We call them share-based compensation dito sa Pilipinas. So, yung mga employees, di ba, in a way, ginagamit ito ng HR para, tawag dito, ma-motivate din yung employees. Kasi, di ba, since sila ay share owners din, parang owner na din sila ng company. So, they would really contribute to the success of the company. Hindi ganun. Kumbaga ay, ita-try din nila talaga na i-uplift yung company, yung reputation, they would protect it. And of course, tawag dito, yung productivity, kasi kailangan nila talagang pagandahin yung financial performance and financial condition ng company. Kasi, owners na sila ng company. So, anong nangyayari, minsan, ginagamit siya as, bonuses for the employees, especially sa directors. Kapag naging profitable yung company, instead of giving away cash, although some do, di ba, cash ang dinidistribute, but others, they would also try and distribute shares instead. Okay? Kasi, ownership to the company. And of course, kapag naman na yung shares ay nasa employees or directors na, kapag nag-declare ng dividend, edi may matatanggap sila na dividend. Okay? Preference shares. The Companies Act, Section 85, 1956, describes preference shares as those which carry a preferential right to payment of dividend during the lifetime of the company and carry a preferential right for repayment of capital in the event of winding up of the company. Okay? At ang preference shares, kaya siya tinawag nga na preference share kasi merong preferential treatment. Pero yun, marami siyang different types, depending on kung ano yung inattach na preferential right dun sa dividend. Dito, meron tayong di-discuss later. Ito. They have the features of equity capital and features of fixed income like debentures. Okay? Kasi minsan, merong preference share na makakatanggap ng fixed rate of return every year. Okay? They are paid a fixed dividend before any dividend is declared to equity holders. So, kapag nag-declare ng dividend, una silang binabayaran bago pa yung ordinary shares. Okay? Features of preference shares. Following are the features. Okay, priority to dividend. Preference share dividend is payable on a fixed rate. Usually, the dividend is a percentage of the par value of the share. It must be paid before any equity dividend is paid. Okay. So, for example, 12% preference shares. Okay. So, let's say yung isang tao may hawak siya ng 100,000 times 12%. Edi yun yung matatanggap niya na dividend for that particular year. Okay. So, kung marami silang preferred shareholders, uunahin muna silang bayaran ng dividends based dun sa percentage na yon. Kung ano yung matitira sa dividend declared, yun yung paghahati-hatian naman ngayon ng ordinary shareholders. So ngayon, kung magkano yung tira na yun, pwedeng mas malaki dun sa preference shares, pwede rin mas maliit kaysa dun sa preference shares depending on the performance of the company. Okay, so essentially, yung sa preference shareholders, naka-fixed, right? Pero yung sa ordinary shares, it could be lower or it could be higher depending on how much is the earnings of the company. Okay? Cumulative nature, not really all. Merong cumulative, merong non-cumulative. Kapag non-cumulative, ibig sabihin, kapag hindi napag-declare ng dividend this year, wala silang matatanggap din na dividend. Let's say, loss yung company or maliit lang yung earnings. So, gagamitin muna sa operations. They decided na wag na muna mag-declare ng dividend. So, yun. Merong cumulative, merong non-cumulative. Kapag non-cumulative, hindi makakatanggap din ng dividends along with the ordinary shares. Pero kapag cumulative siya, ibig sabihin, although hindi siya mababayaran ngayon, the following year, kapag nag-declare na ng dividends, isasama sa computation yung the previous year na hindi sila nakatanggap ng dividend. So, ang mangyari, parang 2 years yung matatanggap nila na dividend. Okay? Tapos, again, kung ano yung matira, yun yung paghahatian ng ordinary shareholders. Yun yung ibig sabihin ng cumulative. Okay? Non-participatory, so, di ba, let's say, nabayaran na yung fixed, yung 12% nila. Kapag participatory, ibig sabihin, di ba, may excess, Eto, pag non-participatory, hindi na sila makikihati doon sa natitira na excess. Ang maghahati na lang doon, ordinary shares. Pero kapag participatory, makikihati pa rin sila, okay, doon sa excess, okay. But it would, tawag dito, meron siyang limit depending on how much is the total preferred shares outstanding, okay. Yun, hanggang doon lang yung limit ng participation nila, okay. Pero pag non-participatory, hindi na sila makikihati doon. Preference as to assets unwinding up. So, let's say close yung business, mauunang isole yung, tawag dito, yung equity ng preference shares compared sa ordinary shares. Okay? Convertibility. Merong other preference shares nakalagay. This is convertible to, let's say, pwedeng convertible into ordinary shares, pwede rin convertible into bonds, so magiging siyang liability, or into another type of security. Tapos, normally, yung option ng convertibility, pwedeng nasa holder siya. So, pag nag-decide yung holder na gusto niya i-convert, then the company would have to honor that. Okay? This right of conversion is exercised by preference shareholders mostly to participate in the excess earnings of the company or to gain ownership control. So, normally, convert nila into ordinary shareholding. Okay? Non-voting, ang preference shareholders normally, again, have no voting right. So, kapag nagkaroon ng shareholders meeting, di ba, hindi sila nakikisali sa botohan. Okay? mag-declare, kunwari, merong acquisition of some sort, merger, ganyan. So, hindi sila nakikibote. Okay? Unless, may nakalagay din dun sa kanilang document, na they have voting rights. Okay? Kasi pwede rin naman na magkaroon. Depending again on what kind of preference yung kanilang binili na shares. Okay? So, ano yung naka-grant na rights or preferential treatment. Other types of preference shares, redeemable preference shares naman. Ito pag redeemable, I think the option is with the company. May right si company na bawiin itong mga preference shares na to. Let's say nagkaroon ng excess na pera si company, babawiin na niya lahat nitong redeemable preference shares. Okay? Hindi naman lahat ng preference shares, yung mga redeemable lang. Okay? The shares must be fully paid up kapag gustong i-redeem ng company. It must be redeemed either out of profit or out of reserve fund for the purpose. So, kailangan ay may nakaset aside na fund si company para dun sa pagre-redeem. Okay? The premium must be paid if any. Okay? So, let's say, kunwari, di ba, tawag dito? Ang market price nung share is 200 pesos, pero binili lang naman siya ni shareholder for 180 pesos. Okay? Pero may agreement na i-redeem siya for, let's say, 190 pesos. So, it should be repaid dun sa redeemable price na naka-indicate. Okay? So, in a way, para siyang may premium. A company may offer redeemable preference shares to avoid fixed liability of payment, increase the earnings of equity shares, to make the capital structure simple, or such other reasons. Right? Normally, nag-offer lang naman sila ng preference shares kasi nga mas attractive ang preference shares compared to ordinary. And then, sometimes, of course, ang kinakonsider kasi na pinakang owners talaga ng business lang is, of course, the ordinary shareholders. So, minsan, to make it easier for them to get funds, edi they offer preference shares. Pero if they want to, kumbaga, make it more attractive for users of financial statements, di ba, makita nila na yung equity talaga is fund talaga siya ng company or ordinary shareholders ang may-ari, edi yun, they'd like to convert preference shares into ordinary shares or redeem the preference shares para mawala na sila dun sa statement. Okay? Irredeemable preference shares, so ibig sabihin, hindi siya mariredeem ng company naman, except kapag liquidation niya. Ayan, convertible na pag-usapan na natin kanina, participating, pag-usapan na rin. Ibig sabihin na ng participating kapag, nabayaran na yung dividends due to preference shares, yung excess ay para sa ordinary shareholders na, right? Pero kapag yung preference shares ay participating, nakikihati pa rin sila dun sa excess na yun. And then you have cumulative, kapag hindi nabayaran yung particular year na yun kasi walang dividend declaration, the following year na mag-declare sila ng dividend, so yung for the current year, saka previous years na hindi nakapag-declare, yun yung babayaran. Preference shares with warrants, yung first dibs on additional or increase in capital, authorized capital. Kapag mag-i-issue sila ng panibagong shares, so merong, first dibs. Ayan, fully convertible cumulative preference share naman. Ayan. Part of such shares are automatically converted into equity shares on the date of allotment. The rest of the shares will be redeemed at par or converted into equity after a lock-in period at the option of investors. Ito medyo nagkaroon lang ng terms na partially convertible at first, tapos yung the rest meron pang conditions that has to be fulfilled before ma-convert them. Okay? And then debentures, ito naman, instrument under seal evidencing debt. Okay, so in this case, utang na to borrowings naman. The essence of debenture is admission of indebtedness. It is a debt instrument issued by a company with a promise to pay interest and repay the principal on maturity. Okay? Debenture holders are creditors of the company. Okay, normally kaya siya tinawag ng debenture kasi wala siyang, walang collateral, walang security na kapag hindi nakabayad, hatakin ko yung kotse mo dyan, or yung vehicle nyo, or yung machineries nyo dyan. Okay? Wala siyang ganon. Okay? Wala siyang term na ganon. Debenture siya, so kumbaga, yung instrument lang, tapos nagtitiwala na babayaran din ng company yung interest and yung payment upon maturity. Okay? It is customary to appoint a trustee, usually an investment bank, to protect the interests of the debenture holders. This is necessary as the debenture deed would specify the rights of the debenture holders and the obligations of the company. Okay? So, yan. Kapag gano'n naman, di para na siya secured. Kapag nagkaroon na siya ng terms na magpo-protect dun sa holders. Types ng debentures, dalawa, secured saka unsecured. Kapag secured, edi merong collateral or merong certain terms na nagpo-protect dun sa holders. Debentures which create a charge on the property of the company is a secured debenture. So, yan. Kapag hindi ka nakabayad, akin yung machinery mo dyan, okay, or akin yung factory vehicle mo dyan, or akin yung tracking vehicle mo dyan, gano'n. The charge may be floating or fixed. The floating charge is not attached to any particular asset of the company, but when the company goes into liquidation, the charge becomes fixed. Fixed charge debentures are those where specific asset or group of assets is pledged as a security. Okay, so dalawa pala, pwedeng naka-indicate kung alin dun sa assets ng company ang pinaka-security, or pwedeng hindi rin naka-indicate, pero basta merong statement lang na I will take some of your assets when you're unable to pay. Okay? The details of these charges are to be mentioned in the trust deed. Unsecured debentures, walang security. Known as naked debentures, well-established and creditworthy companies can issue such shares. So normally kapag, trustworthy company ka naman, may reputation ka, may history ka na, matagal ka na dyan, kumbaga there is less risk na magsasara ka bigla or hindi ka makabayad. So yan, pwede mag-issue sila ng unsecured debentures. Bearer debentures, payable to bearer and are transferable by mere delivery. Okay, so let's say, ito yung nagpautang, hindi pa makasingil dun sa pinagkautangan niya kasi hindi pa naman matured or hindi pa due, pero kailangan na niya ng pera, so yung instrument, pwedeng ibenta niya muna sa iba para magkaroon siya ng pera. Tapos ngayon, ay tawag dito, ang creditor na, edi kung kanino niya binenta yung bearer debenture. Okay? So, yung company, magbabayad na siya, edi dun sa kanya, kasi sa kanya na binenta yung security. Normally, pa yung dun sa bentahan, syempre, mas mababa compared to the maturity value para meron din siyang income. Right? Okay. Tapos, ito naman, debenture pa rin siya. Meron siyang coupon for the interest payment. So, yun. Clipped up by the holder of the bond and deposited in his bank for collection. The bank may forward it to the fiscal agent of the company and proceeds are collected. Okay. Registered debentures naman, registered in the name, the name and address of the holder and date of registration entered in a book kept by the company. The holder of such debenture bond has nothing to do except to wait for interest payment. Okay? So, yan. Hintay na lang. Such debentures are registered as to principals only. Coupons are attached. The holder must attach the coupons for interest payment and collect them as in the case of bearer bonds. Okay, pero hindi siya transferable. Okay, next we have redeemable debentures. So, ito, the company has the right to call them before maturity. So, let's say 5 years yung debentures, pero may pera na si company after 3 years or 4 years. Gusto niya nang i-redeem. Para yung ika-5th year is, hindi na babayaran yung interest. So, pwede naman niya na gawin. Okay? Basta yung debenture is may nakalagay siya na siya ay redeemable. Okay? Pero kung hindi siya redeemable, edi wala siyang option to do that. Convertible debentures, ito naman ang option is na kay holder. Okay? If he so chooses, pwede niyang i-convert into equity shares yung kanyang hawak na debenture. Pero normally may terms and conditions din. Pwedeng nakaspecify doon. Let's say, after 3 years, kapag pwede siyang i-convert into equity shares kung gusto niya. Okay? Or how many years. Depende kung ano nakalagay doon sa debenture certificate or security evidence. Okay? Non-convertible debentures with detachable equity warrants. Okay? Hindi naman siya convertible, pero mayroon siyang warrants na kasama. You can, again, yung warrants, para siyang right na, you can purchase shares of the company at this period for this price. Okay, so yun. And then we have bonds. Okay, debt instruments that are issued by companies or governments to raise funds for financing their capital requirements. Essentially, utang talaga siya. Okay, yung bonds, edi meron naka-indicate how much interest yung babayaran, and then magkano yung face value ng bonds. Okay, have a fixed face value, which is the amount to be returned to the investor upon maturity of the bond, yung pinakang principal. Tapos ay a fixed period of time, let's say 5 years, 10 years, at a predetermined interest rate. So, let's say 10% or 12%, ganyan. Depende na kung ano nakalagay dun sa bond certificate. During that period, yung investors makaka-receive ng interest either semi-annually, annually, pwede rin quarterly, or monthly. Depending on kung ano nakalagay sa certificate. Palagi kasi pagdating sa mga financial securities, depende kung ano nakalagay dun sa agreement or dun sa evidence of ownership. Okay? Bonds can be issued at par, at discount, or at premium. Tapos kapag in-issue na siya ng government, meron siyang specific maturity date then, which can range from a few days to 20 or 30 years or even more. Okay? Both debentures and bonds mean the same. Utang, borrowings, loans. Okay? Before, government lang yung nakag-issue sa kanya. Pero these days naman, both private companies and government can issue that. Okay? Pero of course, pag government, since, much less yung risk of default kapag ang nag-issue ay government, then mas mababa talaga yung interest rate ng bonds issued by the government compared to those issued by private companies. Okay? Basically, there are two types of bonds: government bonds, treasury bills. Ginagamit nila to finance their capital requirements kasi nga, for example, hindi pa nila nakakolekta yung mga taxes due from the people, mga fees from customs or things like that. So they needed capital to do the projects, to fund their projects. So minsan nauna na nag-i-issue sila ng bonds, tapos of course pambayad dun sa bonds, edi kapag nakakolekta na sila ng taxes nila or other revenue. Corporate bonds, debt securities issued by public or private corporations that need to raise money for working capital or for capital expenditure needs. Different types of bonds: zero coupon bonds, okay, issued at a discount to their face value, and at the time of maturity, the principal is repaid to the holders. Okay. Kaya siya tinawag na zero coupon bonds is that parang walang interest na binayaran, right? Pero na-avail mo siya at a lower price. So, let's say, ang maturity value niya is 5 million pesos. Bibilhin mo lang siya for, let's say, 4,500,000. Okay? Tapos, ay after maturity date, ang matatanggap mo, 5 million. Okay? So, essentially, meron ka naman talagang kinita, di ba? Yung 500,000 na difference. Pero, matatanggap mo siya at maturity date. Hindi yung annually may matatanggap kang interest or quarterly, monthly, semi-annually. Hindi ganun. Kaya siya tinawag na zero coupon bonds. Kasi matatanggap mo lang yung pinakang income at the end of the period at maturity date na. Mortgage bonds. So, ito merong security lang naman. Kumbaga, yung bonds is secured by a mortgage, pwedeng physical assets ng corporation, building, or equipment. Ganyan. Convertible bonds, so pwedeng i-convert at the option of the holder into shares of stock. Shares and stock mean the same thing. So why is it shares of stock? I'm not sure. Okay. Ayan. Tapos step-up bonds, a bond that pays a lower coupon rate for an initial period, which then increases to a higher coupon rate. So let's say first year, 10% lang, second year, 12%, third year, 12% din, tapos fourth year and fifth year, let's say 15%. Okay, kumbaga mas pataas ng pataas yung interest rates na naka-indicate. Callable and non-callable bonds. Kapag callable, ibig sabihin redeemable lang naman. Pero, kumbaga, option lang siya ni company. Pwedeng i-exercise niya yung option or pwede rin namang hindi. Okay? So, yun siya. Yun yung kaibahan niya sa redeemable. Okay? Yung redeemable, I think, required na i-redeem talaga. Ano? Parang callable option lang siya. Okay? Option bonds, investors have the option to choose between cumulative or non-cumulative bonds. In the case of cumulative bonds, the interest is accumulated and is payable on maturity only. If non-cumulative, edi binabayaran na periodically. Okay? So, parang ganun din. Pero ang pipili yung investor, kung alin ang gusto niyang mangyari. Anong gusto mo? Tanggapin mo every year, yung interest, or at the end of the maturity period na lang ba? Okay? Bonds with warrants, again, yung warrants, yung kapag nag-increase ng, tawag dito, shareholdings, yung company. So, kayo yung may unang, kayo yung unang tatanungin kung gusto nyong i-avail or hindi before siya i-offer to others or to the general public. Floating rate bonds, ibig sabihin lang nito, hindi fixed yung interest rate tapos nakalink siya sa benchmark rate or yung market rate. So, kung ano yung effective interest rate na ini-impose ng financial system, so yun yung magiging interest rate na babayaran dun sa bonds. Okay? So, hindi siya naka-fix na 10% or 12%. Kapag bumaba yung ini-impose na interest rate sa financial system or financial market, then bababa din yung babayaran. Or pag tumaas, edi tataas din. Okay? Government securities, so dito sa atin, normally, treasury bills lang naman. So, skip na natin tong type na to. Promissory notes, they do this, pero normally, institution to institution, hindi siya institution to individual. Promissory notes, stock certificates, wala namang stocks ang government. Bonds, they do. Okay. Bearer bonds, dated securities, normally bonds din, treasury bills, zero coupon bonds, yan, meron din. Partly paid stock, we don't have that here. Floating rate bonds, yes, we do have. Bonds with call or put option. Okay, pag sinabing call, ibig sabihin babay or bibilhin pabalik. Kapag naman put option, ibebenta. Okay? Option to sell to the issuer. Tapos we have capital indexed bonds. Ibig sabihin yung rate, interest rate ay naka-fixed percentage over the whole sale price index. Fixed rate bond, edi yun. Kung 10% na nakalagay, edi 10% ang babayaran interest rate. Kung 12%, edi 12%. Okay? So, ayun lang for this video. Ang mga diniscuss natin ay capital market instruments. Okay? So, mga instruments na, traded in the capital market. The different types of debt and equity securities. Okay? So, that's it for this one. Thanks and bye.